since I made that, ever since I did that video with him, he started to view the market like that. I changed his view on price with one video. And mind you, this was like 4 or 5 years ago, so it wasn't as common back then as it is now. No, I never did a live stream with Romeo. Never. Neither of them, bro. It's neither of them. ICT is the original author of Turtle Soup. LFE, yeah, you're day one, dude. Thanks for being here. That's crazy. They hate me for arrogance, and because I called people out for fucking faking it. And then I just said, then I finally gave up. And it's like it's not worth it because it's toxic. It's very toxic, and let's not do that. I'm gonna clean everything up. Notice the hourly chart. So that 1 minute looked bearish. Look at the hourly. What's it look like to you? It's still bullish to me, and they're using this as support still as a bullish breaker coming on up. 30-minute will close. There's a brand new 30-minute candle. Yeah, this looks bullish right now. So it's 10:31 right now. We just now opened this new 30-minute candle. If we're going to see bullish continuation, this new 30-minute candle should close like so, and we could possibly see a new high, right? That'll take us to 11 a.m. That's bullish order flow right there, coming off of a bullish breaker here on the hourly. And then now we got the down close candle, nice wick on top. If order flow is going to remain bullish, we'll see this candle do so, like that. We want it to trade above the down close candle. And if we get that, we could possibly take a late New York trade. Will it be high probability for like a giant trade? No, but we could squeeze something out. Look at the bodies all in here, staying above the breaker. Now we're coming on up. There's some nice displacement right there. So you'll hear me again say this. If we're going to make a new daily high right here, and if we're going to continue, we don't want to see price trade back below that displacement candle here. So essentially, that's what we want to see right there. It's just a little risky because we do know, we're not really trending on these lower time frames. It looks sloppy. It's all up to the higher time frame, whatever it decides it wants to do. Notice right in here, price is staying above this down close candle with all these wicks right here. That's nice to see. And then we get the displacement, open power through rebalance. And let's see if we can continue. Again, I'm not trading, but I'm gonna allow them to do what they want. The only way I would take a trade is if we keep going higher and then create an EOB on the way before taking out the highs. If they were to do something like that, then I would join. But as of right now, just a watching and waiting. Let's see how our 30-minute ends up wanting to close. What was that? What time frame was that? This one. Yeah, we want this candle to close on above that. That, if we're bullish, that's what we'd want. Stabbed up into it. We want to get back on. If we're bullish, we want to see them get back on up above there. You saw a quick turnaround. Stabbed up into that fair value gap and a quick reversal. This candle will close in 20 seconds. Let's see how it closes. I never said, hey, I am bullish right now. We're going to the highs. I never said that. Yeah, strong closure right there. Coming off that fair value gap we had on our charts right there. Let's see if they use that as a bearish order block to take out the low now. You know, stuff like this, though, is exactly why I really didn't want to execute our first initial trade. A lot of back and forth. But this up close candle to that fair value gap, the IFVG, and then we see that immediate rapid response lower. So there's an engulfing pattern. But again, I just wouldn't do it because of all of this back and forth, back and forth, back and forth, back and forth. I don't like to predict breakouts. Yeah, I was only looking for longs. If I were to enter a trade today, I'm only interested in longs. You got that right. Yes. Because guys, because I understand what price is doing. We're just going back and forth, back and forth, back and forth. We took out all the sell side over here to the left with the new week opening gap, went all the way down here, and then we traded all the way back up. There's our weekly range. What did yesterday do? It traded down to the only visible PD array inside of that range on a 4-hour. We hit that. Then I was expecting a bounce here. Not really expecting. Well, I kind of was expecting, but it's Friday. Yesterday, see how we're just going back and forth? Yesterday, giant bearish candle. I was just saying it today, wanted to come all the way back up. Because look what we've been doing, just going up, back and forth, back and forth, back and forth, back and forth. There's a little volume imbalance right here, a little gap. There's no reason to predict any sort of breakout lower. Every single time we come lower, what happens? We come back up. So I'm trading it inside of this condition. This is the condition, range bound. London took out sell side liquidity. London took out previous day low, and then we started to trade higher. That's why I was looking for longs. If you paid attention to the first part of this session, then you would already have the answer to that question. The London Open Shorts was the hourly EOB, ran sell side. Then we traded back on up here and broke through the bearish SIBI. If it was bearish, guess what? This SIBI would have held us lower. Since we broke through it, that's not bearish order flow. In return, you're going to see price go to the most immediate high. And that's where IFBGs are born, right there. IFBGs become a thing due to failed fair value gap traders. Because every time a fair value gap fails, what ends up happening? They go through the fair value gap and go to the immediate high. That's the birth of IFBGs. So we got 20 minutes until the hourly closes. Okay, here's one of my fractals right here. Okay, if we're bearish, what should the current hourly candle do? It should trade down below this candle's low. Notice how fast it's dropping right now. We have 20 minutes left before the hourly closes. So if we're going to be bearish, yeah, you'd want to see it occur in the next 20 minutes. You'd want to see them get below that low in the next 20 minutes. This isn't a good example of it, of the time frame alignment. We got 20 minutes left, but it's still ugly. But notice what that hourly's doing. And then there's the fair value gap below. They're probably interested in that. What pattern formed before this run lower? Up close, down close engulfing. After coming off that IFBG. Yeah, that could have been a nice trade today, right? These are just things I'm showing you guys. Where's price coming off of? What happened before this IFBG? The 5-minute EOB up here. So that's a bearish PD ray respected. Come on down, come back up real quick at 10:30 for a new 30-minute candle. There's the retracement. It's a brand new 30-minute candle, so it has a right to pull back. IFBG, sell side liquidity. Started breaking down right here. There's a nice fair value gap fill here. And then they responded. And then there goes that low. So not showing. Hold on. There you go. Again, I'm not interested in trying to chase a short now. If I were to have taken a short today, it would have been one of these two. Sell side has been swept. Now, you can't all of a sudden now want to be wanting to go short, right? 9 out of 10 times, it's not going to end very well unless, there's a logical explanation and a clear narrative behind everything with a clear, reason why price wants to go all the way down here. And they keep easily creating new arrays and it's just clear, right? Like I said, if they want to continue though, there was that little 5-minute no wick candle down there. Here's the 3-minute time frame. They ended up using that 3-minute bearish order block right there. Open, power of 3. Zunk, zunk. Coming off of 1 array, coming off of 2 array. Then we create the 3rd array to finally send it to that low. See that? That's how you reprice. That's how I reprice. Yeah, I'm not anticipating no breakout under all the lows. By no means. I'm going to come back in the next week wanting to be bullish. And then we'll see what price does. And then go from there. We'll do our free stream earlier next week. It won't be on a Friday. That way y'all can see some more stuff. But yeah. Does the way I'm reading price right here, does it make sense to some of you? Is it, helping you? Is it teaching you anything? Let me know in the comments, please. Let me know if it helps you out. Even though I didn't personally take the trades today. Okay, cool. Go ahead. Don't bite me.
How long is it gonna be?
About 6 more hours. I'm kidding. All right, well, there goes that level too. There's that no wick level down here. A reason why price could want to go down there. And there you have it. He was. You should have saw the look he gave me when I said 6 more hours. He's like, 155 points. Holy moly. Now, if you were in that short right there, you definitely want to pay yourself. Okay? Because we know they can come back up and fill in this fair value gap. So you want to take something off here. Anybody in this chat currently shorting? Good job, guys. Good job. Most important part of this short, up here, the change in the state of delivery with one candle. That's the CISD EOB that's noted in my new PDF. That's one of the 3 main EOBs that we trade. Your trade can be EOB short, stop loss EOB body high, target low, to it, and through it. 6-hour trade. If you miss that, you can try the IFBG pullback and just understand that if we're going to be going short, we know they're not allowed to trade above the respected EOB level, which is this candle's wick high. So as we pull on back up, you're going short with your stop there. What was it? I think if you go to a 10-minute, there's the IFBG even more clear. But it's also a fair value gap on the the right side of the curve. That's what's more important. The right side of the curve, not the left side of the curve, the right side. We're met with that. And if we look over here, we can see this no wick fair value gap level now a whole lot cleaner. This is the main level. That's the inefficient area and price right there. This bullish candle has absolutely no wick on it, and there's a little gap right there. That's your reason why price could go lower. So that's how you frame your trade. You want to have a reason why these levels should work. Well, the reason here would be sell side liquidity blended with inefficiencies. Here's your inefficiency right here. That's all the market does is take out liquidity and rebalances imbalances. That's all it does. You can look right here on the 1 minute time frame. Bullish up close, bearish engulfing, power of 3, 1 minute EOB down to the target. Zunk, zunk. What happened before this EOB was created? Look at the EOB high, look left, volume imbalance. They respect the volume imbalance, create a bearish EOB, then it works. That could be your trade right there. Like there was plenty of different areas to go short, anticipating a run on sell side and anticipating this fill down here. And yes, in a normal session with my premium group, there's a very high chance I would have took one of these trades, whether it been the first one up here, second one, third one, fourth one of them would have been took while navigating all this. Anywho, yeah, school's out for freaking. I had no idea. School is closed today and Monday. Crazy. We're gonna take a screen grab of this because that was the highlight. What did we say too about the current hourly candle? If we're bearish, what should it do in the next 20 minutes? When it was up here, we said it should get a closure below the bullish candle. What would bring down this hourly candle? Literally everything we just discussed on lower time frames. Bearish lower time frame PD arrays bring down higher time frame candles. That's why we start. That's the whole purpose of higher time frame analysis. We can call this higher time frame for now. It's hourly. We got bearish or bullish fair value gap in here. That can be the whole purpose, right? Plus the no wick candle, so on and so forth. If we open up price, we can see right here there's a little gap in price right there. That's probably going to be their next draw down here. And then possibly even this one. Who knows where they want to go next? I really don't care. We are fixing to close the hourly candle. It's getting a little sticky here. We're coming into 11 a.m. I don't know what they want to do. I don't know where exactly they want to go next. Here's the daily. We did rebalance a lot of the previous day, but I'm not anticipating, such large breakouts. Because look what we're starting to form, an hourly EOB right here. Open, power of 3, go lower. I don't like to see them close this far though. Yes, they can still work, but given the situation we got here, the only other draws I see is in here. In the next 5 minutes, I'd want to see them pull back up some if I were to try to take a trade here based off the hourly. What's inside of that EOB? Well, we got this 5-minute civvy. But if these targets get hit, definitely wouldn't be interested in it. I would assume the next hourly candle to either continue or just completely come all the way back. There goes that final push right there. That final push. Yep. Damn, I should have traded today. Can we redo that? Let's just redo it. Come on. Monster move. 250. 250. See a lot more clear on the 30-minute. I know somebody made money today. Damn, Ollie, you were doing good. What the hell happened? Oh, now you're up. Okay. Well, yeah, man, I thought you was doing good. You was doing good. Yesterday, I thought you was up like a lot more than that. Come to find out you was down. What happened? Oh, you took the payout. Okay. And then your first trade after the payout, you're down 700. Now you're back up. Sheesh. This just goes to show you, man, like we can read both sides of the market. Yes, it's hard to change sides. That's another like difficult thing to do. You gotta, find reasons why it should change. Where are we coming off of up here? That was the hourly premium fair value gap. That's what we're coming off of. So real quick, if you don't want to hear me, if you don't want to hear me explain everything, go ahead and leave because I'm about to close this out. I'm just gonna do a really, really fast recap for the content purposes. Yes, this is gonna sound hindsight. But anywho, so what do we have here? So before the 9:30 open, we were looking for inefficiencies. Price is always taking out liquidity, filling in inefficiencies. Do we have an inefficiency on the chart? Yes, hourly bearish fair value gap here. How can we get up there? Well, the market opened originally The market opened on a 3-minute time frame, took out sell side liquidity, and then immediately created a 3-minute EOB. Called out this level here, 3-minute EOB. If we're going to go higher, that could hold us higher to get on up here as our first draw on liquidity. That happened really quick. Once we hit that, we broke down. Then we zoom out to a 5-minute time frame. We have a 5-minute CISD EOB, which can be seen right here. 5-minute EOB, but it's the CISD EOB. Prices going up, 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 up. One candle, change day delivery, open, power 3, EOB. The main focus is that occurred after hitting a premium PD array above buy side liquidity. Okay, that's the most important part. So you could have took that 5-minute EOB short, stop loss EOB body high, wrote her on down. That's cool. That's trade number 1. Oh, trade number 1 was the long. Trade number 2 could have been this 5-minute EOB short. Trade down lower. 10:30, we pull on back up. If we zoom out some more, we can see the 10-minute IFBG and FBG blended together. So there's a pullback right here. Look how the candle closed way down here. If they want to resume going lower, let's check out those lower time frames. So here is that retracement into the IFBG right here on a 5-minute. We wick up into there. We're staying below the 5-minute EOB. That's what's most important. Break down. Target sell side liquidity. Big old run. Now we want to find a reason why price could want to come lower. Well, go back to that hourly time frame. There's the hourly fair value gap